Hello, everybody. This is Dennis Sullivan with Sullivan Associates, and we are here with our May 2013 economic update. In this video, we will discuss a few of the events that drove the markets in May and also look ahead at what might happen in the days and weeks ahead. Now, by the way, at the end, would you please stay tuned for a very important video disclosure statement that I will read. Now, markets were able to end May in the black despite some weakness in the last days of the month. For the month of May, the S&P 500 gained 2%, the Dow gained 1.9%, and the Nasdaq gained a very impressive 3.8% for May. Earlier in the month, the Fed did announce a general plan for tapering its quantitative easing program as the economic recovery continues. Markets became volatile in the last 2 weeks of the month as investors processed this news. Fed Chairman Ben Bernanke clarified that the Fed will not be rushing to exit, but would tighten monetary policy cautiously as economic conditions continue to improve. Now, many believe that the Fed's bond buying program has been propping up markets, meaning that an exit of Fed support could cause markets to slide. While that's good news that the Fed isn't shutting down its bond program immediately, we could expect additional volatility in the coming months as markets prepare for the end of what we call easy Fed money. Overall, economic data was positive in May. We got another look at the revised first quarter GDP, which came in at about 2.4%, down slightly from the 2.5% initial reading. The downward revision was expected due to some slower inventory growth. Consumer sentiment for May beat expectations, reaching the highest level since July of 2007. Now, on the downside, the last weekly jobless report for the month showed an increase in unemployment claims, meaning job growth looks to have been essentially flat over the last 2 months. As first quarter earnings season wraps up, we can say that it was a pretty average earnings season and nothing to get too excited about. Profit margins are slightly up for the S&P 500 overall, but once you take out the financial sector, margins are down for all other sectors. While about 2/3 of the S&P 500 companies were able to beat profit expectations, only 40% were able to beat revenue expectations, meaning that demand was still soft and companies were able to achieve profits by doing more with less. Now, looking ahead, we may see continued volatility as investors digest economic data and continue to monitor Fed actions. Markets have responded well to positive economic data earlier this year, but concerns about the Fed may cause investors to react in contradictory ways. As always, we'll be watching closely and looking for investment opportunities as markets move. That is a wrap. I appreciate your attention. Before I sign off, let me just remind our clients and prospects of 2 upcoming seminar events we have at Sullivan Associates. They are scheduled for July 30th and August 1st at the Seasons 52 restaurant in Altamont Springs, Florida, for those of you who are watching this video that are local. What's unique about these 2 events is that they are for women only, although the invitation does indicate that husbands are welcome to come. Women have some very unique challenges in retirement that we would like to discuss with our clients and prospects. So please, if you have an interest in this, you can register for these 2 events at our website, www.denniswsullivan.com. Again, that's www.denniswsullivan.com, or call the office 407-261-9170. And I appreciate your consideration. Any feedback, any questions you might have, please send us an email or call the office. We'd be happy to respond to that. That's about it. Before we sign off, let me read the disclosure statement. While we believe the information in this video report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Thanks so much for watching, folks. We'll see you here next month.